Good morning, traders and investors, and happy Friday. It's June 17th. Don't ask me where this month is going. As far as I'm concerned, it's still December. And the thing about Florida is the weather is so mild, it'll confuse you. If you told me right now it's September or May, I would probably believe you. I've completely lost all track of time after this COVID started. No joke. Like the last 2 years has been just like a black hole. You could tell me it's February, you could tell me it's December, I'll believe you. Let's get into market analysis. And boy, oh boy, folks, it's been a real tough week, and a lot of people are starting to feel the bear. I want you to understand, typically markets turn around when most retail investors give up. That's usually the time the markets turn, and I'm seeing a lot of people starting to throw in the towel. This is not a time to throw in the towel. This is a time to be defensive and lower your exposure and start taking trades to both sides of the market, and we'll talk about that a little bit later today. Now, the Dow's opening up. Well, I don't know where it's going to open up, but right now it's up about 237 points. The Nasdaq's up 147, which is quite a lot. And the S&P is meeting us halfway in the middle. We do have Jerome. Oh, I'm not going to predict the future, and this inflation is transitory until it's not. Powell speaking. And then we have industrial production, which is going to be a pretty big report. Industrial production is really important right now in light of all the supply bottle chain next we've been having. Housing starts was okay. Manufacturing was awful. Jobless claims was fine. There was no real issues there. The biggest issue is the CPI last week and the Fed raising rates 0.75 of a point. But here's the thing that a lot of people are not talking about. Core CPI, when you take away the energy and food costs, was same. It wasn't higher. It was 0.3, and it did not go higher. I'm going to repeat that again. Inflation, when you take away food and energy, did not go higher. It stayed the same. So there is evidence that inflationary pressure is topping out. And if that's the case, markets will go higher, not lower. Another thing that I want you guys to pay attention to is this. This is the bond market. Notice the slope. Notice how it's been going down. Notice in the last 2 months how we've been we did go down day before yesterday this week. Notice we're kind of coming back up into that range. Notice how we're getting more choppier. The more choppier, the more horizontally we will go, the less pressure there will be on the stock market. Because remember, the long bond takes into account short-term interest rates as well. So this is what to expect down the line, and we were going down precipitously. All the way started in December, just a week or two before after the stock market, or right around the same time. But as you can see here, we've been getting choppier. And with this, we've been seeing some sectors like consumer discretionary communication sector start to level out. So this is a real good sign that either we're bottoming out and we're going to go sideways, or we're going to be more in a choppier market, and that strong downside pressure is behind us. There's other factors that would solidify that. The number of stocks in the Nasdaq right now, we're literally right now. This is 2008. Look at where we're at right now. So, don't throw the baby out with the bathwater and start throwing away your blue chip stocks, okay? Because energy prices may be going to 200, and we may be bouncing. So the point is the market may be assimilating all of this. That's what I'm trying to say. That's the number of stocks in the Nasdaq above the 50-day moving average. There's 6 right now, 6. Now, what about 200-day moving average? Look at where we're at. There's 15 stocks out of 100 that are trading above the 200-day moving average. And this is COVID. This is 2020 COVID right here. This is 2008. So as you could see, we're not all the way up here. If we were up here and the market was down 20%, I would be really scared. But we're really getting down there. And no, don't ask me, Roger, when is the market going to bottom out? Are we there? All I'm doing is looking at these charts, and I could see that we're getting very close. So it may be now, it may be a week from now, but the bottom line is we're getting close to the bottoms. And I'm looking at the same factors that you guys are looking at. So you tell me when we're going to be bottoming out. We're looking at 20 years of history, and the conditions right now are not as bad. Also, markets this week, as you could see here, made new lows. This is very significant. See that? New lows. Look at volatility. Did not make higher highs. I repeat, did not make higher highs. That's very significant, and put the call ratio remains above 1. And look at this. We haven't gone below this level since last year. So the market is winding. Those puts are winding and winding and winding and winding. If we were going between puts and calls, I would say the market is fairly balanced. But it's stretched out because nobody's buying calls. So you have a huge amount of puts being bought and if the market starts turning, they're going to be covered. So again, you've got the bond market starting to move horizontally. You've got the put to call ratio remaining extremely over high. You've got volatility not making higher highs. The percentage of stocks is near the 2008 or 2020 crash levels, and the number of stocks above the 50-day moving average. So things are not looking as bad when you're looking at it from where we're going to go from here. Let's talk a little bit about global economy. Investors worry the move to control inflation that's running at a 4-decade high may tip the U.S. and other major economies into a recession. Along with rising rates, some of the $1 trillion of bonds bought by the Fed to inject money into the U.S. financial system during the pandemic are allowed to roll off its balance sheet. That should put upward pressure on market interest rates. And if that's the case, it may put more pressure on the stock market, but we will see, because I think that's priced into the market, because we know how much money is going to be taken off the books, and it is going to be taken rather slowly. Fewer Americans are applying for unemployment benefit. I told you that the unemployment spike over the last few weeks was in fact transitory, and it was. President Biden, oh boy, don't get me started with him or his inactions. He told Associated Press on Thursday he saw a reason for optimism. A recession is not inevitable. And I agree with him. A recession is not inevitable. So I think we have some potential upside. This week we had two profits. We took a profit. We had two very quick trades. We started the pattern trader. We took a profit on PVH. It was an overnight, 2 days we were in the trade. We took 12% profit on this stock. Nice 2 days. We've had 3 for 3 winners in pattern trader since we started. And we finally got rid of our Sony short trade that we've been in to the short side for quite some time. We took 16.67%. We were in that trade for 26 days. We wrote all this right here, and we finally got out of that trade. So we have been, in fact, taking winners. And next week, I'm expecting the market to start moving a little bit higher, because these levels are just telling me we're way oversold. Or if you look at the Dow, let me show you the most potential scenario. The odds are we're going to start bouncing from these levels because they're really overdone. And look at the RSI. It's bottoming out. There's a good chance we're going to go back into this range of 415, especially with all these gaps. We're probably going to fill them. Look for market to start bottoming out here. On the QQQ, over the next few weeks, I'm looking at a bounce to, let me just show you that level, to the 311 level, 311, from 275 to 311. And on the SPY, I'm expecting us to go from 366 to 410. So I'm expecting a pretty good bounce to basically undo everything that happened over the last 5 or 6 sessions, because this week was horrible, but everything is overdone. Also, keep your eye on consumer discretionary. And notice it did break the low yesterday. It had no choice. I mean, the market was just down almost 1,000 points, but notice it's starting to hold up better. If you look at the broad market, look at how steep that low is. And consumer discretionary, see that? And consumer discretionary has been the weakest sector. So let's see if we can get some love and some upside from the consumer discretionary stocks. You're also seeing divergence here. And typically when you see divergence, higher, lower, you see a little bit of a turnaround. So don't be surprised if we see a bounce to the 157, 160 level, on 158 level, probably 158, 157 on the consumer discretionary, and then we'll figure out where we stand. Now, folks, due to overwhelming demand and positive feedback that I've received this week, I've decided to go live again at 1 p.m. Eastern today, June 17th, with the biggest trading breakthrough of my entire career. This is cool. When you see this, you're going to love this. It's a brand new way to trade stocks without having to worry about any fundamental or technical indicators. That's right. You can go long in a bear market. You can go short in a bull market. It doesn't matter. Here's the catch. I'm only letting 250 of my most loyal and dedicated students into this special journey, because my goal is to hyper-focus on the first group before the system officially goes public. If you think you have what it takes to be part of the 250 founding members, click on the link below. Find out how to join me at 1 p.m. Eastern Time Friday, June 17th. That's today. Follow the link below. You do not want to miss this out. And on Monday, weekly outlook, biggest threats, biggest opportunities. Pay attention today to Mr. Jerome Powell speaking, whether he's going to be talking about raising rates to a point, a 1 full basis point, or keeping it at between 50 and 75, and industrial production. This will be a very, very important number, and I think the market's going to rally between now and probably the middle of next week, and then we'll figure out what's there. If you guys are enjoying these videos, send me some email, support@marketgeeks.com. What are you waiting for? And post some comments below. Bye, guys. Have a great, great day. I'll talk to you later. We will get out of this together. We got into this together. We'll get out of this together in one piece. This is not the first market downturn, and it's not the last. Bye, guys. I'll talk to you soon.